So basically, we put about $240,000 in, which is not a bad starting package. And we have got 306,000 in cash. So there's a strange thing. We've put 240,000 in, but we've got 300,000 cash, and we've been going for about a month. There are 4 ways that we make money. One is to hold shares, and as the price goes up, it appreciates. We can then sell them and make a profit. We haven't done any of that. We can own shares and get paid a dividend. Well, we don't own and haven't owned any shares, so we haven't had any of that. We can offer the option to people to buy shares from us that we own. But as we haven't owned any shares, we haven't done that. So that only leaves one place left where the money can come from, which is put options. So this is where we have offered people the opportunity to sell us shares at a future date at a price we agree at the time of the sale. So we agree to take shares up to a certain date at a price. And in return for that, we get a compensation for taking the risk that doesn't turn out to be a good idea. And sometimes it might not turn out to be a good idea, but you'd be pleased to know that when that happens, we have got plenty of things we can do about it. So I've got some, the screen is full. We've got 29 of these trades already. So we'll just have a quick look at some of them as examples. So starting at the top of they're just in alphabetical order. The first one is a company called AEIS. We've got 102 days left, so it's January. These all end, basically, there's a little exception there, but mainly they end on the 3rd Friday of the month that's quoted. So this one will expire on the 3rd Friday of January. Until then, someone has a right to sell us these shares at $95. And we have said we will take 1. Now, that's not 1 share. These, when we talk about options, these numbers refer to a number of contracts, and each contract is 100 shares. So we have said we will buy 100 shares at a price of $95 up to the 3rd Friday of January, and the current price is $87.08. However, we got for that a premium of $13.60 per share. So if we take the current price of roughly 87 and add 13 on, we're up to 100. So it's a question of, at present, it wouldn't be the end of the world if we had to buy those shares for $95. And we fully expect that the price will get to more than $95. And then people won't be interested in selling them to us at $95. They can sell them to the market for the market price and get more for it. Under those circumstances, we just keep our $13.60 per share. So it's a similar story right throughout all of those. They're all pretty much the same. We've got a spread of industries, gold mining there, retail, Bed Bath & Beyond, Carnival Cruise Line. So some of these you will have heard of. Discovery is another one. Fossil, as in fossil watches. GT, which is Goodyear Tires. Hawaiian Airlines. Las Vegas Sands Hotel. Tell you, some of these are exotic. AT&T, which is T there. So some of them you will have heard of, and others you won't. Now, going across to the panel on the left-hand side here, if we close the account today, we would have 241,000. If we close at this minute, $241,810.80. And that is slightly down on the money that we put in, because some of these go down before they go up, and we've also got brokers' fees to pay. But we've also extracted from it, and although it has a negative sign in front of it, that's a good thing. that means we've been paid $64,000. It's a $64,000 question collectively for making these promises. We expect probably 80% of them to end in them just us keeping the money. The others will do something else with them. Now, another important figure on the left here is this one, stock buying power. So because we're making all of these promises to buy shares, we need to keep some cash in reserve. So if they're put to us, we have to be able to pay for them. But we certainly don't expect all of them to be put to us, especially as they're at a variety of dates: March, January, November, December, April, there's November in there, there's all sorts, December again. So we don't need pound, dollar for dollar on them. But we do want to keep about half of our net liquid value as buying power. That gives us at the moment, I think it's about $230,000 worth of buying power. So each time we execute one of these trades, it uses a little bit of that buying power. So we'll see it go down. So that's easy enough. Does everyone follow what we're doing? Okay, let's actually let's do one as an example. And
so Jeff, I have a question.
Yeah, sure.
Yeah, just a quick question, Jeff. So are you thinking that some of the positions we have, we could dollar cost average? Is that what you're thinking? And is our budget per position around about 12,000 right now? Is it?
The figure that I've been using so far has been based on it was the initial 200,000 that we put in. There has been sort of 40,000 gone in the last couple of days, so I now need to revise it to explain to people what Owen and I are talking about. The idea of all of this is that eventually we will end up owning shares. We'll end up owning shares, getting price appreciation, getting dividends, and also selling people the option to buy them from us. But we don't want too many shares of any particular company. So we want to try and end up with about 5% of the value of our account being in one of each of 20 shares. So Owen is saying, is looking a bit light now. It looks as though we've sort of taken not a full 5% position. And that's because we've added more money just in the last couple of days. So we now increase the number of shares that we want to own in each particular trade. And that will do two things. One, will increase the initial number that we go for. And two, we will, when we see good opportunities, top up the trades that we've already got to bring them to a position where if they are put to us, we'll end up with 5% of our holding or so in them. Does that explain it, Owen?
Yeah, no, perfect. I was just thinking, so we initially would have started with a budget of roughly 10,000, but now we're up to 240,000. Your budget can increase to 12,000. So there is
indeed, yes,
there is some opportunities because we do oodles and oodles of buying power. There's some good opportunities here to dollar cost average.
Okay, so yeah, so you can explain if you want. So what we're also saying is that because some of these trades were done a couple of weeks ago, some of the prices have actually moved to prices which are advantageous for us to increase our trade in them, and therefore we might do some topping up, but not topping up at the same premium as we got the first time round. Thank you, Owen. Is that it?
Yeah, no, 100%. As you said, we can even get a better premium on some of them.
Yes.
Yeah, 100%.
Okay.
Yeah.
Well, we'll start with a new one though. I'm looking at BlackBerry, again, a company that most people have heard of, and we've got the prices on the right-hand side here, so we can see. We could see BlackBerry if I put it in B. So the ticker symbol for BlackBerry is BB. And there it is. It's $9.34 at present. You may well remember BlackBerry as being a company that made sort of smartphones in the past. They don't do that anymore. They do make components for phones, and they're very much into artificial intelligence, and they've got a huge amount of money. The price that I'm looking at for BlackBerry is $12. So $12,000 would buy us at $12. We would be looking at 1,000 shares. Okay, so the first thing we see are a number of different dates. Some of them expire weekly. We don't use too many of those. Some are monthly. And these are the dates by which people will execute the trades, make us buy them, or in the case of a put, and away we go. So the one that I've been looking at is January. Give it a bit of time because we want to go from the present price of $9.33 up to $12. So if we do that, we're looking at the prices on this right-hand side. And there isn't, first of all, there isn't a $12 option, there's $12.50. And there's a bid price here, and an ask price.
Jeff, can I just quickly ask a question?
Yeah.
Said you want to go from $9 to $12. Where did you get the 12 from, or had you looked at it before?
I've looked at it before.
Yeah, okay.
Hi, Jules. Unfortunately, I haven't got my charting software on this computer, and I'm struggling to get it across. But we'll have a little look. We'll have a look at the charting package that comes with Value Line. And here it is. I haven't even set it up because I use a professional package. So you see my blue line. So can you actually see that?
Yes.
Yeah, that's right. Good. So you can see my blue line here, the horizontal one in particular I'm looking at. And if I go down, it's that's $12.50-ish. So that's $12.55. So what we're saying is we want this stock to go up from the red mark there, $9.32, up to $12.55, and we're going to give it until the third week in January to do it. If we look at there's a year's worth of history there in single days. Each of the they're called candlesticks on here represents 1 day of trading. The green days are days when it went up, the red days are days when it went down. So we can see that it has traded way above $12.50. It has also traded below that level as well. And it has traded at $12.50, 1, 2, 3, 4 times, nearly 5 times, I would say, in the last year. So I think there's a fair old chance that this particularly volatile stock will get to $12.50. If it doesn't, then we can buy back our promise and we'll sell another one for a later date and we'll get some more money for it. Or if it's close enough to it, we'll say, okay, just let us have the shares. We've already had a premium and we'll sell call options and we'll get some more money on. So that's what I'm looking at. A particularly volatile stock that I know moves around a lot, and we're not asking it to get to any of the peaks that it's been at. We're just asking it to go part way up.
Thank you.
Oh, there's somebody else trying to come in. So that's what I'm looking at. I actually preferred $12 to $12.50, but that would be about that level, the top of this peak here.
Yeah.
But for the sake of 50 cents, I think we'll be safe enough, and we'll get some more premium. So this is the trading screen for options. I'm going to add an option. And what we're doing is opening a trade. So we're selling a promise to open our trade. And we're going to go for 1,000 shares. So that's 10 contracts. And we're going for January expiration 2022. If you notice, we can go way up to January 2024 if we want to. The strike price is $12.50, and this type of option is called a put. So let's have a look at that now. So they're offering If we're selling something, we get the lower price. So the bid 370, we buying it, we pay the higher price. The difference 370 by 380 is what the broker is going to take, apart from their fees. So if this gets put to us at $12.50, that's fine. We get it $12.50 and we go with it. If it gets to more than $12.50, we'll just keep our $3, probably 70, and we'll get away with it. So we're already covered down to $9.30 or something. If it goes down from where it is now, we'd still actually be in profit. So these prices are actually delayed by 15 minutes, delayed up there. So when we press verify, we see what the current prices are, and they're about the same. I don't think this goes in 5-cent intervals, but I will just check. So I'm looking to get now $3.75, but it's going to, it does go in 5-cent intervals. That's interesting. So they've said, no, we want $3.70 and you want $3.75, Jeff. So that's no good. So we go to the orders section, and there it is at the top, a little circle here. And I'll pull it down to the 370 and see if they're happy to do it at that. And they are.
Yeah.
So that's executed. So we now have 1,000 of those. So now I want to put something in place called, we refer to it as a lid. I'll explain it as we do it. So if I go back to the trading, so that was a sell to open order. And now I want to place a buy to open order. So this says, I'm saying, if this thing gets put to, if it goes up and this order triggers, which it might not, and then it goes down again, let's say it went down to $5 or something, this would give us the right to be able to sell these shares again at whatever strike price we go for, which would be 1 down. So that's 11. So if it went to $10.99 and these, we'd be made to pay $12.50 for them, we could sell them for 11 and we would still have kept the $3.50 that we got paid. $3.70, sorry. But no use giving all of the money back to do this, so we are going to just give 10% of it. So about 35 cents. And we note this to be a lid trade. So it's buy to open, 10, same strike month, 1 strike price down, still a put, but we're now buying the right to sell the shares. Buy to open for 35 cents, we call that a lid. So this won't go through. This will sit in the system and only trigger if and when the price of this gets down to 35 cents. Okay, so back to our portfolio, and there's a new one in there now. There it is. And there's the money we got for it. Now I've got another 1, 2, 3, 4, 5, 6, 7 of those. we can do all 7, and you're welcome to go through it, or I can just go away and do them. It's sort of up to you, or I can do some of them. How is everyone with that?
Yeah.
Can I ask a question, Jeff?
Yeah, of course.
If say BlackBerry goes up to 14 in December, so a put would be worth. Can we sell opposition at a profit before January if
Yes, we can. Yes, we can. So what you see these top 2. So one is January, one is April, but the P&L is already positive on them. One's in a profit, like it's 10%, one is 25, 26%. So we wouldn't, because we think the price is going to get to where we expect it to be. But as we get further on, if those figures get up there, 80%, 90% profit, then we will definitely consider closing them. What that would then do is release buying power for us to go away and do another trade.
But if our calculation says it's going to be 12, why wouldn't we close it early because it's above expectations?
Because we're not so much interested in it could close at 12 or 200. It wouldn't make any difference to us. We won't get any more than in the case of this one, $3.70 for it. So once we've got to the position where our $3.70 or 90% of it is safe, then we might as well close the trade. So what we've accepted for it won't change.
Okay, so you can't sort of sell that on.
Yeah, I mean, we could buy it back and sell another one.
Back. Right. Yeah.
But the deal is that we've said, give us $3.70 and you can sell these to us for $12 or $12.50. They're not going to give us any more money for the right to sell it at $12.50 to us once they've paid for it.
Yeah. But if you buy a put rather than sell it, then you can resell it on, can you? Is that the way it works?
Yeah, we can buy it back, and then we can buy it back and place another one.
Okay.
But if we basically only sell puts. We buy protective puts. We don't. It's actually a much more dangerous game to be buying puts. So we only do it as a protective thing. We can lose a lot of money.
Maybe what might help there, Jeff, if we take a look at the example of that GT one that's over 40% in profit.
Yeah, sure thing.
So folks, if you want to look on the right-hand side, of that GT one, under the cost basis, it tells you how much we received in actual hard cash. Now, the minus doesn't refer to minus cash. It refers to the fact that it's a short position, meaning that when you buy shares in the stock market, that's considered a long position because you're like buy and hold for the long term. When you sell a put option, which we've done here, that is deemed a short position because it will eventually expire in a short period of time. So that minus doesn't refer to minus money. It actually refers to the fact that for that GT trade, Jeff actually pulled in $2,750. And right now, if Jeff felt like closing that position, which he wouldn't normally do, but if he did want to do it, under the market value now, he'd only have to give back 1,575. So the market gave him 2,750. He now could give back 1,575 and walk away with a clean profit. And so it's a bit difficult to get your head around in the beginning because we sell something first and then we buy it back later for less than we sold it to make a profit. Most of you guys are thinking, hang on, I got to buy something first and hopefully sell it in the future for a profit. We do the other way around. We sell something first, we get paid cash, and sometimes we might buy it back later on much cheaper. So think of it that way. We sell first, get the money in, and then we decide how much of that money we're going to keep.
And the norm is that we want to keep all of it. So we don't sort of close them for no reason. If we have a good reason to close it, then we'll close it. Okay, we'll do another one. And the next one that I've got on my list is CAH, which is at Cardinal Health. So let's have a look again at the option chain on Cardinal Health. See what we can find. We always tend to do these several months out to give them a chance to rise to the level that we want. This, if we look at the chart, have a look at the chart again. Here it is, and again, this is a year, so it's at a nice low level, lower than it's been certainly in the last year. It's also got a gap where the price closed at this level on one day, and the next day it opened with a gap and continued with a big fall. So probably earnings or something came out, and we know that most of these gaps eventually get closed, and it will probably move first of all the price to too many at the bottom of that, and it will zigzag up. It'll end up closing it, and it will go on from there. So we're looking at something between sort of 52 and 58 max. If we look at it in terms of how quickly it moves as well, it can be fairly slow. That's we're looking at months there, so we want to give it plenty of time. I'm thinking probably March for it, but let's have a look at the option chain. And if we went to March, which is 158 days, length of time. What have we got? We've got $52.50 would give us 610. $55 would give us 790. But of course, less, we'll get there less quickly, and 52.50 is probably safer, but gives us slightly less money. Everyone happy?
52.50.
Yeah. I'll look at the chart again. So 52.50 would be here. So we only want to get it. It only needs to get up to there for us to make our money, and that's not difficult for it. The chances are that we can sell another one after this and get some more of its journey up to here, having pocketed this one. All right with that?
Yes.
Now, so dividing 12,000 by 52.50 would give us 228 shares. That's no good to us. We want either 100, 200, 300, we want a full 100 numbers of shares, because that's the only way you can trade options. Given the amount of buying power we've got, even though it's 228, I think we should probably still round up to 3.
Yes.
That gives us better cover on the cost of the trade as well, the broker's fees. And no doubt we'll have more money going in anyway. So this time we've got prices showing of 610 to 630. So we'll try and do a bit of negotiation. And again, I don't know if it actually does 5-cent intervals or not, so this will tell us. Yeah, so it's saying rejected. The price must be divisible by 10. So it doesn't like me being that cheeky. So we'll go in between there, 620. So that would give us proceeds of $1,860, less 50, or just under $15 of commission. So we'd end up with $1,845, and not bad. Now the live price is a bit higher, 610 by 640. So I'm going to try. I'll try and get 630. Every little helps. No. Now I'm not actually disappointed. I'm disappointed if I get it, not if I don't get it. If I don't get it, I think, well, I've gone too low. Or if I get it, I think I've gone too low. That's how it works. So we're now going to come down in 10-cent intervals. So we've got them. So we're still 10 cents above the stated, $6.10. So that nicely covers our fees. Thank you very much. And anyone tell me what we're doing next?
Lid.
Put a lid on it. Yeah.
Quite open.
I get told that a lot. And so I've gone one strike price down, which is $50. And we got 610. So we're going to give them 10% of that, which is about 60 cents. I'm going to put a lid in the comment. I don't know where it comes out, but we'll put it in. So again, we verify, just check what we're doing here, 60 cents, right number of contracts, right month, right strike price, press trade. It doesn't go through. It will only click in if the price comes down to 60 cents. Back to the portfolio. And by the way, we started this evening with cash of, what was it? It was 306. We're now at 311. Just those two trades.
So Jeff, did that lid go through? It didn't look like it did to me.
No, it wouldn't. It was it's a limit order, Jules. So it's gone through in terms of.
Oh, okay. Stopping.
It will only
stop the rot.
Yeah, it'll only actually go through. That is new, so it is in place,
Okay.
but it's a limit order at 60 cents.
Right.
Okay. I can keep going with these, or I can just do them very quickly. They're all pretty much the same to see, but what I also want to show you tonight is the dashboard. Yeah.
Yes.
Oh God, there's someone's getting admitted now. You see it now?
Yes.
Yeah.
Okay. So we've held sessions on this, and we'll hold more sessions on it. I don't, we only did it like a week ago, so I don't want to go through it too much. But this is really from the end of September. So we've put this together on a monthly basis. So some of the figures here now you won't recognize. The account value invested 204, it's now 240. The account value is 241. So the figures are not there because it gets updated monthly. But we had option drag of 67,000. That's now well up from there. But what I really want to show you is a new page that I'm looking to introduce, which is here. So the idea is to be able to let the members know where they are at the end of each month. So this is the first time anyone in any of the clubs has actually seen this.
Nice.
So I have a question.
It sounds like Jules is having a spreadsheet orgasm.
Not for the first time, I suspect. No, but I have a question for you. Now, we're all happy members of a club, but when I put this out, you need to know which of these lines refers to you personally. And so the question is, are you happy to have a spreadsheet posted only to the members that has your name showing on it? Or do I have to do some fancy code word or something?
I'm happy with my name.
Yeah, I'm happy too.
Is anybody not happy? And
I'm okay with it.
We've got 16 members.
I'm happy.
We've got about 13 members on tonight out of sort of 15. So we've got a good majority if you're happy with it.
Yeah, I'm happy.
Carried and recorded.
Well,
There
asked
we
the
all
guy
are.
who put. Oh, right. So he's the guy who put 50k in, and now we know.
He's a nice guy. It's only 50k, I can tell you.
He's buying the drinks. Yeah.
Yeah.
Hey, wait for it to all mature.
Yeah.
Yeah.
So let's just go through what we've got here. I haven't actually put any money in yet. I will. The club officially started on the 1st of September. So there were some people put money in before that, even I think possibly at the end of July, but we weren't trading by then. So basically, no matter when money went in, if it was on the last day of July or the last day of August, I didn't take into account the time difference that had been in because we weren't trading. And that's what that pre-1st of September figure refers to. So that's just money that went in before we started trading. Then we got money that went in on or after the 1st of September. So that is showing here. Now that does make a difference. So money that went in on the 1st of September would get more. First we got a total, and then you can see the percentage that's gone in from each of the people in terms of actual UK cash has gone into the trading account. But then it gets converted into units. And the units do change. So if somebody put money in on the 1st of September, and then somebody put the same amount of money in on the 20th of September, the one that went in on the 1st of September would get more units for September. It's been there for more of the trading month. So that's where the units come from. And on a quarterly basis, so whenever we sort of distributing profit, I can send out the huge, horrendous spreadsheet that shows how we arrive at the units. But basically, it is just the number of pounds multiplied by the number of days left in the period. So we get a slightly different percentage, slightly different percentage based on that. I then used the current exchange rate, so that was the exchange rate that was around on the beginning of September, and it was $1.28 per pound. That will, again, that can change as we go forward. And then you can see so how much they've invested. That's the 204, which relates to the figure that we saw on the front page. Okay, and we then take the net account value again as it was when this was done, and we spread the money around based on the percentage of units that people have got. At that point, there's no price drag because we don't own any shares, so we haven't bought any shares that are less value than when we bought them. All we've got is option drag, and you can see how much of the option drag, which was then 61,000, is yours. And the total drag, so that would be price and option drag, and the value then with drag. So we got, so Jules, net account value 7,371, option drag of 277. So by the time you add that in, that's 9,648. Gain. So the gain with no drag is just the bit we're down for basically brokers' fees, and that's 218, and the gain with drag is 6,473. Have I got my lines right, which I haven't?
No, just up a bit.
There, that's the one. So yeah, that's how you
arriving on or before 30th.
Yeah, you get to this. There's some notes in here.
Or after the first of the month.
So these figures represent a progress report. The actual gains are those that we measure at the end of the quarter. And after there's no money taken off this lot. So there's no money for training fees, research, or anything else. This is just raw figures. The invested pre-September includes funds arriving, and I take the date for funds arriving being the date they go into the VFX account. Then we got money arriving after that. This raw, as I've said, units are based on the figures that adjusted for the time in there. The actual tradable dollars arriving in the account after currency conversion. So we have charges for the exchange, we have charges for sending money across and so on, so they come out. I put the account values just carried from that front page, so that was done on the 11th of the 10th. And cash raised from the sale of yet to expire options is LS. So hopefully that's a lot more simple than the quarterly thing we have been sending out. Is there anything missing? Is there anything else people would like to see in there? That's probably a very big question to answer off the cuff. I'm going to be sending this out, so have a look at it, and if anyone's got suggestions for improving it or simplifying it or anything else with it, wallpapering with it, whatever, then let us know.
Jeff, is there a foreign currency swing? So, for example, if the US dollar sterling rate is 1.5 and I put 10,000 sterling in, that's going to be an equivalent of $15,000. Obviously, if that dollar rate goes down to 1.3, then potentially there's a swing there, isn't there? Is that reflected anywhere on the?
Not as such, because what I'm doing is I'm just taking the value of the pound against the dollar on the day. So it's a question: if you brought your money back on that day, what would the exchange rate be? When we're sending money over, then obviously money goes over. It can go over several times a month, or on different dates. On that one, we actually get a figure, so we see it arrive. So here we go. Wire funds received. So we get an actual amount there. So that's the figure that's used.
Okay. Yep.
Yeah. Yeah. I mean, so you can't get better than an actual.
Yeah, and the point, Jeff, on the dollar pound swing, it does tend to average itself out over time, and Also within VFX, we do have that ability sometimes if we want to forward buy at a fixed price or forward sell at a fixed price, if we know there's a certain amount of money going to be going in on a regular period, there is that flexibility within VFX to lock in a favorable rate, which stays locked in for 12 months if we want to use it. And then just for people to understand the option drag, not only is it the broker fees, it's also the difference between the bid and the ask. So as soon as Jeff sold that BlackBerry put that we just saw a couple of minutes ago, if he changed his mind and wanted to buy it back, it would actually cost him more to buy it back than he received. So as soon as he sells a put, it's actually down in value because of the difference between the bid and the ask.
So all of these figures, and although it hasn't got a dollar sign in front of them, they're actual. So even down to these paper confirms here, these were $3 charges that we had against us for being sent, land mail confirmations, until we got into the account and switched that off and said, no, thank you. All we want are email confirmations. So every single cent of movement in the account ends up being shown in here. So that, I think that's a definite step forward from what we've done previously. Yeah.
Lovely. Thank you.
Good.
And for those that are with us as introducers, I think it's a very powerful document that you could use. But if you are going to use it with third parties, then you should probably blank out the names. But you not only probably should, you should. Yeah. Anyone got any questions? I would just mention, by way of advertising, that we recently held a live training session at East Midlands Hilton Airport Hotel. And there were about 22 people there, and it went extremely well. The people who came away from that have got a far, far better understanding of what's going on and how we make money, how we get out of trouble, and generally how it all works. To the extent that I think at least a third of those people came back and put significantly more money into the trading account. So they voted with their wallets, which is very nice. And we're doing this again. I think it's the 5th. It's about Friday and Saturday, about the 4th and 5th of March, I think it is, next year. So on the Smart Investments website, smartinvestments.ai, there's a booking form for that, which you can do there. Anyone that hasn't already registered on that website, that's on the front homepage, there's a very simple register here thing. It's just having a name and email address. If you register there, especially if you let me know, I look every few days, if you let me know, I'll go in. I then upgrade you to give you access to all of the online training. So at least all the online training that I've done anyway, which is on the same website. So then you can work through what we're doing here in significant detail. But it's still, nothing can bring it to life quite the same as a live session. I'm an animal now, I'm a little horse.
And then, Jeff, if we could also mention the Warren Buffett AGM next year.
Oh, yes. Is it the 13th of May?
It's we travel out on the 29th of April, and the actual AGM is on the 30th of April.
So I've been on one of these previously, and it's absolutely brilliant. So we're leaving on the 29th of April, which is my old dad's birthday, bless him, and we'll be away a week in the States, visiting. It's Omaha for the Berkshire Hathaway AGM. So that's Warren Buffett and Charlie Munger. Blessings and praises will be upon them. Hope at least one of them still alive by then, given their present ages. We will also be visiting the New York Stock Exchange, the offices of the people that deals with our back office in New York, and also going up to Chicago, where we'll be visiting the Chicago Board of Options, where all these options are traded. And there's more visits there too. We'll be spending some time with a guy called John Naranjo, I've met, great guy, He's a sort of TV whiz in terms of the markets, ex-pro footballer. And throughout that period, there's also quite a lot of education sessions. It's, you know, it is a really, really fantastic thing. And I'm certainly putting my marker down to be there. We can take a maximum of 20 people, and there's already a lot of seats are going. So it's not a question of decide in April. I am sure that the spaces will be gone long before that. And again, there's a lot more detail on this on the smartinvestments.ai website, where you can have a read of it there and see what's involved. It's an all-in price, so it's flights, hotels, meals, not the drink, but everything else. Yeah, that's all right. Fine. So, any final questions or points? We've got a message coming in here. Just a second. I better read that. It's pertinent to what we're talking about. So this is about the American trip. So have a look. On Wednesday, this is of the week in America. There's more time to enjoy Chicago and do the famous riverboat tour before we travel to New York on Wednesday evening. We arrive in New York, check in the hotel, and enjoy the city that never sleeps. That's all right. I never sleep either. On Thursday morning, we'll visit NASDAQ and be hosted by the chief executive of NASDAQ. I want to see her let me ring the bell, but I can't see it, for the opening bell. Then we go to Value Line. That's our back office company. That's our research company, to meet with the head of Value Line and the researchers there. We really, really rely heavily on their information. All of the trades we do, we check out first with Value Line. That's where we understand the fundamentals of the companies. What else we got? Saturday morning, we attend the Warren Buffett AGM. We're not alone. It's not a small meeting in the boardroom. There's 40,000 people, and it's from 9 a.m. to 5. There's probably hot dogs on sale. Saturday evening, all day Sunday, we're in Omaha, just enjoying the party atmosphere, which ensues from this event. And for those that wish to, we will run the Warren Buffett 5K 3.3 mile fun run. I don't think Warren will be running it. Then on Sunday evening, we fly to Chicago and check in the hotel. On Monday morning, we'll visit Chicago Board of Options and be taught the option strategies direct from the people there, from the top traders with decades of experience. And on Monday afternoon, we'll learn about option credit spreads and have dinner with Dr. John, who currently manages a 1.5 million fund, bigger than ours. On Tuesday, we visit the CBOE, that's Chicago Board of Options. That's it, where we do these trades, etc. And there we go. There's a heck of a lot in there, and I think it's great value. It is $7,997. So start saving now or getting your Christmas list out. And $2,997 to pay in October, which is non-refundable. We booked the flights with that and so on, and then the balance on or before the 15th of March. And as I say, I'm aware of probably 8 or 9 spots having been taken already.
Bye.
Thank you, Jeff. Thank you, Jeff.